The live price for Nuburu Inc. BURU is $0.49, reflecting an intraday movement of approximately plus 3.72% as of the last update on Monday, October 13, 2025. This stock has been a wild ride lately, and frankly, the market narrative about Nuburu being a pure-play, high-growth industrial laser company is severely outdated and misses the central action. The surprising truth that the ticker's recent volatility is signaling is not about a sudden boom in blue laser sales for EV battery production, though that's the core technology. It's about a highly aggressive, almost frenetic corporate pivot into defense and security applications through a series of complex, dilutive, but potentially transformative acquisitions. The stock isn't moving on laser product news right now. It's moving entirely on M&A speculation and capital raising, designed to change the company's identity from a struggling industrial tech firm into an emerging defense technology play. That unexpected change in direction is the key to understanding the recent trading volume and price action, which has seen enormous swings, including a drop of nearly 30% and a surge of over 86% on consecutive days earlier this month. The expectation is that this is a classic small-cap, pre-revenue tech stock that occasionally gets a bump on an encouraging contract. But the reality is that the company's management is essentially rebuilding the entire business from the ground up, placing massive bets on acquisitions in the European defense sector like Techne and Orbit, all financed by frequent public offerings. This shift in focus explains the high-volume, high-volatility trading we've been observing. When a microcap company like Nuburu announces a $12 million public offering to finance a strategic transformation, as they did in mid-September, the market's initial reaction is usually a sharp price drop due to the significant dilution. They issued over 84 million shares and warrants. However, the subsequent rebound and recent pops, like the one we see today, suggest that the defense tech narrative is actually resonating with a segment of investors, perhaps those looking for smaller, high-risk, high-reward plays outside the massive cap sector where names like Nvidia stock and Tesla stock dominate headlines. Institutional ownership in Nuburu is currently quite low, which is typical for a stock in this price range and stage of reorganization, meaning the day-to-day action is heavily influenced by short-term retail trading and the momentum generated by those strategic news releases, which often get picked up by less sophisticated online investment chatter. The announcement on October 7th about the binding agreement to acquire Orbit, an Italian software firm focused on operational resilience, really put a charge into the stock, connecting the defense tech story with a concrete, albeit small, acquisition. This is the new reality. Nuburu is a bet on a successful transformation and execution of a military and critical infrastructure strategy, not just the industrial laser business it was founded on. The tension here is that investors expect a quick turnaround, but the reality is a complicated, multi-step acquisition and integration process across international borders and highly specialized sectors. Let's look closer at the chart dynamics. The daily swings are less about the fundamental valuation, which remains challenging given the minimal revenue and negative shareholder equity, and more about momentum trading and short interest dynamics. The volatility in the last 3 months has been astronomical. We saw the stock trade for well under 20 cents in late September before the full weight of the new strategy and capital raise took hold. The subsequent spikes, including the one that took it to an intraday high of 0.85 earlier this month, are indicative of short squeezes and herd behavior as retail investors using Robinhood stock trading platforms or other investing sites pile in following a positive headline. For a company with a market capitalization in the tens of millions, a few large orders can have a disproportionate effect on price. We also just saw news that the company received a warning letter from NYSE American regarding its compliance for not providing the required advance notification before the dual CEO announcement on October 1st. While this is an administrative hiccup and not a direct financial threat, it introduces a layer of regulatory risk and corporate governance scrutiny that can unnerve institutional players and temper the momentum of those short-term retail pushes. This is the push-pull of high-risk stocks. Positive news about strategic deals is immediately counterbalanced by the operational and regulatory reality of a cash-strapped microcap. The underlying business of Nuburu centers on its proprietary blue laser technology. Blue light is absorbed by highly reflective metals like copper and gold far more efficiently than the traditional infrared lasers used by competitors, which is a significant technical advantage in precision welding and additive manufacturing. This makes it particularly attractive for applications like EV battery manufacturing, where the high-speed, spatter-free, and high-quality welding of copper and aluminum is essential for reliable and scalable production. When you're dealing with battery packs in something like a Tesla stock vehicle, precision is non-negotiable, and blue lasers theoretically offer that edge. The original vision was to address a massive market in e-mobility, consumer electronics, and medical device sensor packaging. However, translating this technological advantage into a profitable, scaled commercial product line has been extremely difficult, which is why the financials show negligible revenue and significant accumulated losses. The old expectation was a slow, difficult climb in the industrial sector. The new reality is the defense and security hub. The company has established a new subsidiary, Nuburu Defense LLC, and is aggressively pursuing acquisitions to build a portfolio of defense tech assets. The goal is to leverage the blue laser technology for niche military applications such as counter-UAV measures, asset tracking, and missile defense, while simultaneously acquiring established businesses like the Italian military vehicle and defense electronics firm Tecne S.p.A. and the software company Orbit S.r.l. This two-pronged approach suggests that the blue laser is now viewed as one, albeit important, component within a larger, more immediately commercial defense contracting business model. The key point here is that defense contracts, particularly those with government approval, like the Tecne deal, can offer more predictable, higher margin revenue much faster than the slow adoption cycles of the industrial manufacturing sector. The problem is that financing these acquisitions has necessitated the highly dilutive public offerings, which act as an anchor on the share price even after a rally. This constant dilution is a major risk factor and is a critical point that any individual brokerage account holder, whether they use Fidelity or a simple SoFi Invest platform, needs to carefully consider. Looking ahead, the future outlook for Nuburu stock is entirely dependent on execution of this defense tech transformation. We need to see a few things happen to validate the current strategic pivot. First, the company must successfully close the controlling interest acquisitions in both Tecne and Orbit and demonstrate a clear, integrated plan for how these new assets will generate meaningful revenue quickly. The tension in the short term is between the excitement of the acquisition headlines and the financial drag of integrating and funding those new entities. For a stock like this, every quarterly report is an outsized catalyst. Investors will be looking not just at revenue growth, but for a solid path to positive operating cash flow, even if profitability remains distant. The management team has to prove that the capital they raised in the dilutive offerings is being deployed effectively to generate accretive growth. Another critical catalyst to watch is the adoption of blue laser technology in any major high-profile defense application. If Nuburu Defense can announce a significant multi-year contract, for instance a counter-drone application, that would be a powerful narrative shift that could permanently reset the market's valuation of the stock. Conversely, a failure to close the acquisitions or continued operational setbacks leading to further need for dilutive capital raises could send the stock back toward its 52-week lows. The risk profile is extremely high, classifying it squarely in the speculative category. Investors who utilize more passive options like Schwab Intelligent Portfolios or Fidelity ETFs would rarely encounter a security like this, which relies so much on high-stakes active management decisions. Those who choose to self-investing and manage their own risk, perhaps through interactive brokers, are the ones typically involved here. The reward hinges on the management team being right about their pivot and successfully leveraging the highly specialized blue laser technology into the massive, well-funded defense sector. The biggest risk is a failure of execution and continued dilution that makes any gains purely transient. It's a clear expectation versus reality situation. The expectation is a smooth strategic transformation, but the reality is a complicated, high-cost integration of new business lines into a pre-existing non-profitable structure. Let's look closer at the chart dynamics. The daily swings are less about the fundamental valuation, which remains challenging given the minimal revenue